Good afternoon. So I think I'm wearing the wrong shirt today, actually. So I was in a meeting just now in Central. That's why I'm in a suit. But so the topic is tokenization in esports. My company has been doing a lot in different areas for tokenization, real estate, traditional funds. But it's the first time for us to talk about exotic asset, which esports is one of them. So giving you a bit of, so I promise you will be a short slide as well. My company, a short introduction, we are end-to-end tokenization solution, meaning that we split asset into smaller pieces, right? So esports teams, we could split that into hundreds of thousands of pieces so investors can buy a piece of that. Our team came from a background of different industries. We're mostly in finance. I was with investment banking, asset management. We have people from Deutsche Bank, Kings & Woods, BlackRock, HSBC, etc. So we were start in November 2018. We raised over $3 million since then from listed companies, VCs, family office, etc. A bit more about myself. I run the company since last November. Before that, I was spending 4 years at BlackRock Asset Management, so doing acquisitions in Asia for fintech companies. So I bought out robo-advisors in Asia, bought out one in Europe for a company. And now, except Liquefy, I also run a VC in Hong Kong. So we invest in seed to round A companies. So far, we have 10 portfolio companies with across Hong Kong, Taiwan, and Singapore. So at the same time, I'm a trainer for a regulator here in Hong Kong on blockchain, etc. So what is the interest that drives me to look in the esports as one of the asset type we as a client is because it's a growing industry, right? So over the past 2 years, except traditional asset, we look at sport teams, AC Milan, NBA teams that is having a growth in the industry as well as a lot of fans involved. And we think esports is going to drive the next era in this industry because of the revenue growth, entering the Olympic era in 2022, number of fans involved. That's why we think it's an ideal asset to be tokenized and allow more exposure for different type of investors. And you guys will know more about esports team than I do. I'm not a frequent gamer, but I do talk to some of the teams here in terms of tokenizing minor percentage of the team. So Team Liquid, J Team, teams playing in the Fortnite, most of them are owned by billionaires, right? Owned by billionaires like Richard Branson, Peter Thiel. But if some of you are fans of certain games, if you are a supporter and you can own 0.1% of the team and you support the team along the way, and this is kind of the thing we're looking at. So when we look at tokenizing the asset, attractiveness of the asset is driven by revenue, how much revenue they made as an asset or a financial asset. So in esports, it's mostly driven by sponsorship. It's mostly driven by the fan support in buying different type of items affiliated with the esport. But we see that most of the revenue actually focus with the top 5 globally. Rest 95% is losing money. They are not monetizing. So that's kind of the model we look at esports. So you will ask then from an esports team owner perspective, why they want to do tokenization? Why from an individual fans perspective, they want to invest in an esports team, right? So from an esports team owner perspective, they want new investors. Now, I mentioned about billionaire guys, some of the bigger institutions that want to invest in esports, but then they always want new investors, whether it's people with several millions of dollars, whether there's people that didn't have the ticket size to invest in esports. In liquidity discount, there's a more financial concept. So usually when you sell a certain illiquid asset in the market through OTC or whatever channels, you have to sell at a discount, right? Not taking esports example, but using Uber shares before IPO. And you want to sell that before IPO, you need to take a 10% discount because that's not a liquid market created for that. So on the flip side, meaning that if I can create a liquid market to trade esports teams, I could, from an asset owner perspective, I could sell more expensively for that team. So high cost of paper ownership that involves every liquid asset that you have to deal with the paperwork with lawyers, company secretary. So from a fans or investor perspective, you have a high barrier of investing in esports. Now, if I tell you to invest in Team Liquid, maybe your minimum ticket is 100 millions, right? To start a conversation before you even have the opportunity to invest. But you can now invest as low as 10K, 15K US dollar in that team, as long as the team owners want to sell a portion of that. Lockup period, investors like us, some of you might not want to suffer from holding so long for a certain asset. Even for VC fund, you hold 7 to 10 years. For esports teams, as I mentioned, the monetized model is sad now, right? It's bad. And you maybe have to wait for 15 to 20 years to exit your investment. So before that, can you trade your exposure in a liquid market? That's the issue. Lack of transparency. So a lot of people talk about fanciness in esports industries, but you don't know what they're doing day in, day out, right? The players got a revenue, daily income for quite a bit of money, right, for the famous players. But how do they spend the money? How do they spend the money? What's the financials? Since esports teams are not listed company, so how can we solve that? So tokenization is a solution, a process to create something we call security token, right? Security tokens, by definition, is the digital representation of your ownership of something on the blockchain. So to to visualize that, it's meaning if I own a certain percentage of an esports teams or a fund or a real estate asset, my ownership could be proven on the blockchain, and you can see that kind of relationship on the blockchain. And in this space, several types of areas we could look at. Either is the team itself, you could tokenize the team. Either you could raise a bunch of money to support a tournament, right? Usually tournament is hosted by big teams, big players in space, but even small players, it's difficult for you to get sponsorship. What about getting sponsorship from individuals to fundraise for a tournament? And as their investors, you get the cash flow affiliated with the tournament. Esports collectibles, I think, is a minor case, but then our team is actually looking at tokenizing real estate related to esports. Now, we're tokenizing one in US, it's a stadium, an esports stadium. So whatever asset related to this area and the high growth, we can tokenize and benefit from that. So to visualize again, now the single guy on the left-hand side may be a huge company, own 100% of the esport, either because he's a fan of the team, either because he thinks it's fancy. But on the right-hand side, you could purchase security token to be part of the team, an owner of the team, so your ownership is proven on the blockchain as well. And obviously, the benefit of that is, from an esports perspective, is there may be liquidity affiliated with trading the exposure. There's automated compliance, meaning that in a secondary market, when you want to trade the exposure, you are doing it in a compliant way for trading the exposure. So you might want to ask why liquidity matters in this space and why it matters to other asset classes is because of what I mentioned, the premium brought to the asset owners. Now, I'm telling you that most of the esports teams want to sell in the market, whether it's, not to mention names, but most of them want to sell because they couldn't monetize. And how they could sell at a more expensive price is usually by selling to companies that have an interest in esports, second generations that are interested in esports. But if I could sell 100 millions of the worth of the esports team to 100 million of people which invest $1 each, I might sell at a higher price because there's a huge crowd and there's a liquidity involved in trading the exposure in secondary market. So that's the incentive for people who want to do it, whether it's esports, whether it's real estate, whether it's funds per se. And obviously in this blockchain space, companies trying to do the token economy with esports, with membership and stuff. And a prominent case is Chile's platform. I think they raised quite a bit of money last year. And they create a utility token to allow esports fans to engage with the teams, with the tournament, with the platform, etc. But there's one key issue in this case, right? It could be so fancy to talk about engaging with esports teams. Today, I would say 50% of the fans vote for Team X to appear at Cyberport, right? But does your vote matter if you are not a shareholder of the company or of the team? It doesn't matter, because at the end, any esports team is structured by a private company which the board of directors decide the decisions, right? So it's from my perspective, it's a good case to be the stepping stone in esports, but it doesn't legalize stuff, which we think esports tokenization in the future comes along with two perspectives. The first perspective is how you could, on the top right corner, to create a security token for individuals to own a certain percentage of a tournament or esports teams. And at the same time, we could combine the utility token concept, which is to whether you want to engage with the platform, the esports teams, you have discount on certain things, your priority to go to certain matches. And these two concepts should definitely be separated for your ownership in the team and your utility to deal with or engage with the team. So we think it's going to be the future, no matter it's esports or any asset. So esports investment platform. The approach of my company is to white label my solution for various industries. And one of the things we're doing is working with one of the largest esports companies in Asia to create an investment platform. So what does that mean is if you look at the chart, a traditional profit sharing model is just with the companies and players, right? You get $100 from a tournament and you have to return, say, $80 to the company, $20 to the player. And the easy to be add component is to have investors sharing that contract between the esports teams and the company. So now as an investor in the team or a tournament, I could share a percentage of the profit, and that could be automated by smart contracts with the security token as an ownership and your ownership on the blockchain. You could sue the people or the company to the court if they're not paying you, right? At the same time, you could potentially enjoy utility in playing the esports space. So that's sort of not just entitled to esports, but our company is doing quite a bit in real estate with this business model. So that's kind of a high-level introduction. My compliance lawyer always suggests a disclaimer. Thank you.
We have a few minutes for questions, if you like. I think you've got a couple of minutes to go. So does anyone in the audience have a question for Adrian? I'll bring the mic over.
Cool.
Here we go.
I don't know about the Hong Kong, but as far as I know, still STO is not a legal matter of raising the funds. So what's your case, your company's preparing regarding these regulation matters?
Yeah, that's a good question. And also is more than esports. Right? Security tokens in Hong Kong is not legal. It's defined as a complex product. Right? Complex product meaning that it's a derivative. So derivative examples is futures, options, etc. So now, if you want to deal with anything related to security tokens in the license space, first thing you have to do is to talk to SFC, right? Talk to SFC, expanding your license and dealing with that. But obviously, from a different jurisdiction perspective, whether you're Cayman, whether you're Singapore, US, Switzerland, all have a different perspective on security tokens. But you are in Hong Kong, you trade that in your license, right? And that is not a new license. A lot of people think it's a new thing. It's actually expanding your business scope. It's pretty easy. It's just a lot of dodgy firms go to SFC and say, hey, I want to do it, and they fail, right? Because they deal with a lot of cryptocurrencies before. Our perspective is because since we raised a new fundraising round, we are acquiring licenses in Dubai and Singapore for broker and dealer and trading licenses. In Hong Kong, we haven't started the move because Hong Kong is not the ideal place, to be honest, for doing this sort of blockchain initiative. But then legally, we could talk offline a lot of stuff that we have done research on.